that continually tracks the price over its entire history.
Yeah.
And that model gives you an upper bound of where price can go. And every past top of a bull market is hit that upper bound and dropped. So if you assume that we hit, you get a top of the market in a cycle, you know, it was like between 300 and 400,000 was the projected upper band for December. And that keeps changing because as we get closer, we get more price information. And now it's like, I haven't looked recently, but I think it's around 200,000 is where it might be the upper bound. But if you take into the context of this other on-chain data we have, it means that we're not going to have a market top, like a traditional cyclic market top, where everything goes into a mania phase and everything runs up and then we have a blow off top and we come back down. We have this drunken walk. It's like the S&P 500. It just keeps wandering upwards.
Yeah.
So it can be in the midline. And so the price could be anything between two models that I have, if they hold. Models are models, they sometimes break. So the upper bound is like 200,000 plus, right? And then there's lower bound, which is, you know, I think it's below the current price by significant amounts.
Wow.
But like the answer to this is that it means that let's not look at the upper bound anymore. Like we're looking at the wrong thing. Everyone asked that question because at the end of this year is the expectation that's the top of this bull market and the end of this bullish cycle. If you remove the idea that we're going to have an end of this bull market like all the other cycles and we do this drunken wander, then this model doesn't really matter too much. And the idea of what is our price end of this year doesn't matter too much because people basically want to know when are they going to sell their coins and go to cash and wait out another year till this thing bottoms. And it's just interesting. It just means maybe you shouldn't be selling. Maybe like we should be like equity investors who just invest and wait for this thing to keep going up without trying to time this market. You know, it's obviously worth timing the market if you're going to lose 80% of your value over the next year. But, you know, we've just seen a pullback of, you know, 50% pullback. And then it's recovered over 2 months. Like I can see a lot of these things happening, but that's not a bear market for Bitcoin. Mm-hmm. You know, the bear market for Bitcoin is 80% and 6 to 12 months.